Markets, meanwhile, what do we have? Well, we've got AMC stocks which are doing very well for themselves. Why? Because the markets thought that if the consultation paper which the SEBI had floated a couple of weeks ago, if that was implemented, that would have acted like a sledgehammer for the profitability for AMCs. Now SEBI has said that they will come up with another consultation paper, but guess what? This consultation paper will make mutual funds very happy. And without even looking at Mr. Singh, I can tell, I'm sure that he had a great holiday, because the SEBI press conference happened on Wednesday, and there you see, thought as much, sir. After the SEBI board meeting, I thought I will see you smiling. So you're smiling after that SEBI board meeting. Looks like the damage on the profitability will not be that high.
Yeah. Thank you, Nikon. Thanks for having me. And of course, it was a lead in the sense we were waiting for it, but as Chairperson Madam has rightly explained, that when they looked at the data and see the economies of scale, which was the intent of the SEBI when they came out with the regulation 2019, that has been met with to a greater extent. And I think the new consultation paper, which Madam talked about, will be much more less stringent, I will to say so. And but I think ultimately intent of regulator, intent of the manufacturer, intent of the government, everybody wants that we should all try to get the good quality capital into the market. And for that, whatever is likely to be done will be good for the industry and good for everyone. I'm sure so much good things are in the offing, and the industry will continue to grow as it is growing now.
Do you expect any kind of a relief also on arbitrage funds? Because if that TER is applied on arbitrage funds, A, profitability, B, returns, they both get compromised.
No, arbitrage fund, see, basically in the previous consultation paper, when they talked about the STT, which is being paid has to be part of TER, that was a little impractical, because in the arbitrage fund, we have to do a lot of buying and selling, and the whole economics would have gone for a toss had the STT be part of the TER. That perhaps was not understood initially, but that's something which industry has been able to showcase to the regulator, and otherwise also. Honestly speaking, the kind of consultation which happened post consultation paper has brought in a lot of clarity in the minds of manufacturers as well as the regulators as well. Earlier, when the lenses which were being put forward to look at the numbers are changed now. Now with the new lens, things are much more transparent, much more clearer. And I think not only arbitrage, the hybrid funds also, their arbitrage is part of it. Or second, see, there should not be any regulation which constrains the fund manager to do a healthy churning also. Because if everything is part of the TER, then in the interest of investors, so many calls which could have been taken will not be taken. So that's something I think the negotiation, the consultations which happened, that has brought in that kind of the consensus, both at the regulator level, at the manufacturer level, and so many things actually a consultation paper made manufacturers to think about, and they have also introspected and said, yeah, there are so many things which can be taken care of. So eventually, I think it's a intervention that a lot of consultation had happened. Perhaps it needed little more time, and that time has been given. I think things will be much better than earlier now.
Bala also joins us. Bala, good morning.
Good morning.
So, Bala, where do you think the middle path really would be? If the consultation paper which was floated by SEBI, if that was applied, that would have, all right, Mr. Singh, what's happening to your video? Okay, he's just trying to maybe fiddle with the zoom in, zoom out. Doesn't matter. Bala, we can see you. Yeah, it's a huge room. I think he's sitting in the conference room. That's what I can guess. Okay, Bala is not fielding and Bala's shot is clear, so we can go to Bala. Okay, Bala, what do you think would be the middle path where SEBI, we have to be realistic here, Bala. The size and scale and the productivity benefits are something which are visible for AMCs, and it should be their fiduciary duty to pass part of that to the unit holders. Everything cannot be passed on, but some part needs to be passed on. What do you think that middle path could be where AMCs are happy and mutual fund investors are delighted?
And what you say is right. I think the way the regulatory framework has been evolving all these years, the industry definitely has to attain a scale, and as a result of that, today what we are seeing in the marketplace, that 40 lakh crore industry size, about 20 lakh crore in equity size, is a function of how the industry has been expanding the base and building a scale. So naturally, the scale benefit should accrue to the ecosystem in general, which essentially the investors benefit. And if you look at the higher the size, lower the fees, have already been given as a roadmap about 3 years back, like what was given in the year 2019. In fact, if one looks at the AMC growth versus the profitability, the growth would be far higher than the profitability. I think profitability has to be looked at from two angles. One is the operating profit versus the cash that gets accrued over a period of time. Therefore, you get other income as well. So if one go by that, definitely the scale benefit has been accruing to the investors. But the question is how much incremental you want to do and when do you want to do, and so on and so forth. Given the fact that industry is still only about 20% or 19% of the banking industry size on an overall basis. If you have to take equity as an asset class alone, is only about 12% of the banking industry size. We still have a long way to go. And second is, if one looks at the AMC industries in terms of expanding across different parts of the country in order to get more number of customer base, we have only about 3.6 or 3.7 crores unique investors. And we still have a long way to go in terms of adding more customer base. Therefore, the question will always remain that what point you want to take that position in order to consider any further reductions. The very fact that SEBI chairperson during the press meet have given an acknowledgement for the engagement that we had with SEBI at multiple levels. I would like to thank SEBI chairperson for this, for having heard us, for having listened to us in terms of the data that we had presented, which was different from what they had in their calculations, which of course she has acknowledged in the press conference itself. For which we would like to thank her, and also given the guidance that she had given, a base of which our engagement that we had clearly highlights the kind of data that industry has been building over a period of time by way of becoming one of the most transparent industry in the industry. So keeping that in mind, the middle path will always be doing a fine balance between the need for expansion of the industry further, need for increasing the customer base, the need for increasing the geographical footprint, and getting more and more people to actually buy into the mutual fund in order to create a healthy capital market in the country. I think all of them have to be taken into account, keeping in mind the whole ecosystem, including the need for building the distribution community to the next level of growth. So all of them are extremely important in building the business. That's what I believe that SEBI is looking at an overall basis, how the ecosystem can actually get built as one of the most powerful, respectable industry, by of course keeping the large responsibility that we have, the fiduciary responsibility, not just only for managing the risk, fiduciary responsibility is also for expansion of the industry.
Okay, so Mr. Singh, we cannot speculate on what the final, the final proposal would be. But let's assume that it gets diluted significantly by 50%. So 50% of what the initial consultation paper by SEBI, which was floated, is at play in terms of the TR rate. What happens to the profitability then? Let's say 50% discount.
Nikunj, honestly, I'm very sorry when your transmission is so weak, I am not able to hear your question itself.
Barish ho rahi hai, sir. It's raining. So it's largely because of that. My question, Mr. Singh, is that let's assume that 50% of what the proposed TR rate was in the initial consultation paper of SEBI, if only 50% is changed, which is the rates they go up by 50% more than what the initial rates are, or it is cut by 50% what the initial rates are, what happens to the profitability?
I think, see, when Nikunj, they relook at it 50% or 60%, I think that's not something which is something which we need to talk about. But the impact will definitely be much lesser than before. But when we are talking about the impact, see, basically there are three stakeholders. One is of course investor. The second is the distributor, and third is the manufacturer. If we bring in overall at a percentage basis, they brings it down. So every stakeholder gets to lose. Ultimately, it is the value which we need to create as an industry for the investor. And I think whatever impact is will happen. I mean, I'm not putting any percentage to that as of now, but we'll have to look at the consultation paper. And I'm sorry, I'm not whether I'm responding to your question or not, but whatever I could hear, but the transmission is so bad that I was not able to hear majority of the part of your question.
Singh, I think the only solution to this is that we should have you in your studio next time. It's raining in Bombay and the transmission will not be that bad. So next time we should invite you and Bala both to come to our studio. How about we do that?
Bala, if you can respond, I am not able to hear.
Oops, बहुत ही खराब है. Bala, next time come to our office. It will be easier for everybody.
Yeah, Nikunj, we will be happy to sit next to you and have a discussion.
Wonderful. Thank you very much for joining us. And let's take a break with the news that